Good morning. I'm John Newquist, and it's July 15th, 2023, and it's the Wall Street Weekly Wrap Up. Let's start with JP Morgan. Wow, what a great quarter. 40 cents it beats on the revenue, up 34%. That's a monster quarter. And you can see when we look at this chart, we talk about these wedges. We don't know which way it's going to go. Well, it broke up to the upside. That's a good sign. And so, a lot of people wait till it breaks out and then they buy because it's the start of a new bull market for people. It's one of our core holdings, been in there for over 10 years, and they're doing great. Wells Fargo, another big bank, not as big as JP Morgan, but revenues went up 20%. Anytime a bank goes up 20% in revenues, that's a pretty good quarter. Beat by 10%, so definitely making money. $125 or $100, $1.25 of earnings per share. Good. And you can see chart, the 200 moving day average, it's coming down like this. It's going good, but it's still not yet. A lot of people are looking at it, said it's going to cross pretty soon, and that might be the time to buy. So if you want a financial that hasn't quite started to peak, that might be the one you want. Stats of the week, well, the 2-year dropped 21 basis points as inflation down to 3%. Wow. And crude oil went down also, and natural gas is flat. Gold is coming around, still looking at that 2,000 ceiling, and silver same way, over $25 again now. Copper dropped below $4. I'm watching sugar because if you can look at it, sugar, yeah, it was $18 a year ago, big deal, but it's up. It's one of the few commodities that's up, and it got up a little bit higher and it's dropped down and went back up to 24, but everybody's watching it because sugar's so used in everything we eat almost. And the NASDAQ still going great. The S&P's, that's our benchmark. That's what we have to be. It's up a good week. And I just looked at the 2-year note. If you had $200,000 contract, it dropped. You can see the notes as the inflation is getting better. They're thinking the rates are going to drop. So the healthcare big in the Dow is the United Healthcare Services. They beat also. I always look at the revenue jump because you want to see if it does grow, and it's up 15%. That's pretty good. Earnings were great. And again, another thing with the pharmaceuticals, healthcare, 200 moving day average, it was much higher, and it's still below it. It's not even above the 200-day moving average. So it's one to watch. Once you get into the point where the stock gets above the 200-day moving average and you're looking for the crossover, then that's what you want to start thinking about buying. But it's in a downtrend right now, and a lot of the stuff, people thinking they're getting all this elective surgery that's been postponed for COVID, now they're going to start spending the money using their health insurance, which is going to take away from their bottom line. And then, of course, BlackRock, one of the big, financials with Mr. Fink. I don't even know what you call it financial. I call it like a hedge fund. But again, good earnings. Revenues, it did drop. And they said 80 billion funds in inflow. So when we look at this stock, again, the 200-day moving average has been floating around. It's kind of in a negative wedge. It's really been trading sideways. But it is a stock that, I think can eventually break out and start having its own run. They're getting into crypto. I don't know. It could go good. I mean, they're going to be a player in it. Crypto's here to stay. I don't care what you want to say. We've made our money in crypto this year. Citigroup, one of the other big 3 banks. Again, big wedge here. And you can see 200-day moving way, way up there. And then it's coming down, and now it's at the cross. So the wedge hasn't really broken out yet, but if it's going to follow JP Morgan, probably be a good time to buy upside. Revenues fell, so that's important. JP Morgan, Wells Fargo, the revenues went up. This one, the revenues went down. So I'm not going to be as excited about a company, given the same set of circumstances. They're losing money. They're not making as much money. ARK is Kathy Wood's technology fund, and it's been, as he said, the story darling at the beginning of the 2020s, and then it dropped dramatically last year like every other tech company did. You can see this slope coming down. This thing was high. And it comes down, and now we've done the crossover. So they're doing good. If you were going to buy ARK, you'd want to probably buy it when it crossed over right about here, around about $40. It's already up 20%. How high will it go? Well, it's going to reflect the NASDAQ. You know, the high beta fast stocks. She's been selling Coinbase and Tesla. She's been taking the profits on it. You know, with short-term trading, that's a lot of taxes you're going to be paying. I just picked Lyft. I was watching people discuss Lyft versus Uber. You know, Lyft kind of always says we're focusing on working on our ride sharing, and you can see this. You know, not every tech stock since you know, January has done well. You know, I mean, it shot up, you know, and then it's come back down. And these, I hate stocks that jumping down like this. Holy smokes! But you know, the 200-day moving average is right up here. We're still down there. It's been going sideways since probably mid-February. Boy, you got to be tough stomach. The trouble is, in May, when it dropped and gapped down, they set a downside guidance. You know, they're going to see lower revenues, and people are bracing. You know, and I don't know. I mean, will it be that much lower? You know, I mean, to me, Lyft and Uber are the same. You know, you're not paying one more than the other. You know, a lot of these drivers I deal with are both Lyft and Uber drivers. You know, so we'll see. You know, but it's an interesting stock. Again, I think the ride-sharing stocks, you know, you can talk about the future, but you know, it becomes an issue of you got to make the money and you got to go through it. They made money in May, even though it gapped down. They made money. So you know, I don't ever throw out a tech company that makes money. You know, if you want to sit there and say, okay, where's it going to be bottomed? Well, it bottomed at 8 and it's at 12. You know, think about it. Again, we're you know, watching all the different sectors, and you know, like I said, it's been a good half. But I picked on Fluence, one of our stocks in our portfolio. You know, we're overweight communication and information technology or tech stocks. Fluence is another one. You know, again, with the Texas heat and now it's Phoenix, Arizona heat, that 200-day moving average is a nice slope upward. I mean, this blue line, that's a good slope. That's what you want. You don't want it skyrocketing where it's parabolic, which you know it's going to drop back down. But you know, as it keeps on going in an uptrend, it's doing well. You know, when we talk about buying it up in, you know, 16 and it's at 27, you know, you're getting close to doubling your money, and it makes money. So just something. It's electric storage utilities. You know, the utilities got to put the electricity somewhere. They're using Fluence. Otherwise, good week. Let's have a good, safe week, and I'll see you next week.